Saudi Arabia has officially ended its 50-year Petro Dollar agreement with the United States, shifting to a multi-currency system for oil sales. Well, this transition allows Saudi Arabia to sell oil in various currencies. This move coincides with Saudi Arabia's participation as a guest nation at the BRICS outreach ministerial meeting in Russia. Well, BRICS now comprising 10 full members, including Saudi Arabia, Egypt, Iran, UAE and Ethiopia. And they all are pushing for greater use of local currencies in foreign trade and financial transactions.
To our channel, everyone. Today we have breaking news that could reshape the global economic landscape. Saudi Arabia has ended the historic petrodollar agreement with the United States, a move that officially took effect on June 9, 2024. Let's dive into what this means and how the BRICS nations, Brazil, Russia, India, China and South Africa, are set to benefit from this seismic shift. For nearly 5 decades, the petrodollar system has been a cornerstone of global finance. This arrangement, established in the 1970s, ensured that Saudi Arabia would sell oil exclusively in US dollars, bolstering the dollar's position as the world's primary reserve currency. June 9, 2024, Saudi Arabia has decided to break away from this agreement. This decision opens up the oil market to multiple currencies. So what does this mean for the global economy and who stands to gain from the most? Let's talk about the BRICS nations. First up, China. As the world's second largest economy and a major oil importer, China has been advocating for a more diversified global financial system. With Saudi oil now available in yuan, China can reduce its reliance on the US dollar, potentially stabilizing its economy and strengthening its currency on the global stage. Next, we have Russia. With extensive oil and gas reserves of its own, Russia is a powerhouse in the energy sector. The end of the petrodollar system allows Russia to conduct more of its oil trade in rubles or other currencies, diminishing the impact of Western sanctions and giving Moscow greater economic flexibility. India too stands to benefit significantly. As a rapidly growing economy with a vast appetite for energy, being able to purchase oil in its own currency or other non-dollar options will help reduce foreign exchange risk and potentially lower energy costs. Brazil and South Africa, while not as heavily dependent on oil imports as China and India, will also see benefits. Brazil, with its own oil production capabilities, can now engage in more favorable trade deals. South Africa, with its strategic geographic position, can leverage this shift to attract new investment and trade opportunities. Collectively, the BRICS nations have been pushing for a more multipolar world economy. The end of the petrodollar system accelerates this shift by reducing the dominance of the US dollar in global trade. Of course, this monumental change will not be without its challenges. The global economy is highly interconnected, and this shift away from petrodollar system could lead to volatility as markets adjust. However, the long-term benefits for the BRICS nations and other emerging economies are undeniable. Thanks for watching. Please like, share and subscribe.